Hello and welcome to this week's episode of Nucleus Investment Insights. Today's episode is called Will 2024 Crash Australia's Housing Market? Who would have predicted that Australian property prices would have rebounded so strongly in 2023 amidst the fastest interest rate rises in history and the fixed interest rate mortgage cliff? With the government running record levels of immigration and the economy potentially cooling, what does 2024 have in store for Australian property? Join us today to find out. Just a quick reminder, this podcast is general advice only and does not take into account your personal financial situation. If you do want to discuss your personal financial situation, you can book a call with me or one of the advice team at nucleuswealth.com/contact. Good. Today, I'd like to welcome Leith Van Onselen, Nucleus Wealth's Chief Economist. Leith, welcome.
G'day, Sam. G'day, everyone. Thanks for having me on again.
Pleasure to have you back. It feels like it's been a while, but it's good to chat about property again. So, yeah, it's great to have you here.
Cheers, mate. Everyone loves talking about property.
Indeed. Favorite topic. My name's Sam Kerr. I'm the Head of Advice at Nucleus Wealth. Just a reminder, the themes discussed in this podcast are a reflection of our thinking in our active portfolios, and you can find out more in the description notes below. The show is recorded live every Thursday at 12:30 Australian Eastern Standard Time, so jump onto the Nucleus Wealth YouTube channel and you can ask any questions that come to mind, and we'll do our best to answer them during the show. The podcast is available on all other major podcast platforms, so feel free to listen there if you prefer. We are still offering a no-obligation super review. So if you'd like a health check on your super, we'll give you clarity on the fees you're paying and benchmark that against the average. We'll also have a look at your asset allocation, as that's the most important thing that will determine how much money you end up with. And we'll also make sure you're aware of and taking advantage of any of the tax-saving opportunities, and make sure you understand the rules of the game. So you can book in a call at nucleuswealth.com/contact. So those are the formalities out of the way. So Leith, over to you to get the discussion started.
Yeah, thanks, Sam. Look, 2023 is about to draw to a close. It's been an extraordinary year in Australian property. Now, if you were to ask me at the start of the year what would happen to Australian house prices, I'd tell you that they would have kept falling. And the reason for that's pretty simple. Obviously, we entered 2023 with the Reserve Bank having hiked rates by about 2.6% by memory, and 2.5%. And basically they were still tightening, and they continued to tighten throughout the first half of the year pretty much. And then obviously they did the last rate hike early November, Melbourne Cup Day. And despite that, we had this strange property rebound. Property prices actually rose by 10% from their bottom at the end of January, and pretty much almost nobody in the market except Stephen Koukoulas. I'll give him a hat tip on that one. Tip that we'd actually get a rebounding property market in the face of an additional 1.25 or 1.5%, I think it is, rate hikes this year. But that's what we got. And effectively, so property prices rebounded by about 10% across the 5 major capital cities, according to CoreLogic. That was driven by a strong 12% rebound in Sydney, just over 12% in Brisbane, and Perth's led the way with 14% rebound. So we've had this sort of universal price rebound driven by those major markets. But what we've seen since the Reserve Bank hiked rates in Melbourne Cup Day early last month, we've seen a marked slowing in momentum in the housing market. So basically, the two major capital cities, Melbourne and Sydney, prices are now falling, according to CoreLogic. If you look at the 28-day moving average, and that's shown clearly in the chart on the right. If you bring that up, Sam, and what that's effectively doing is it's now dragging down, obviously, the national price growth, because Sydney and Melbourne are the two largest markets, and it's been quite a significant loss of momentum. And Brisbane's also beginning to fall. Well, not fall. The prices aren't falling, but the rate of growth has slowed materially since the Reserve Bank hiked rates. And it's really only Adelaide and Perth that are still sort of holding on. And what this basically tells us is that obviously the first 12 or so rate hikes, didn't seem to have much impact. Well, they did initially, but, so far this year, the prices rebounded. But this last one seems to have finally knocked the stuffing out of the housing market. And it's pretty easy to understand why that would be the case. With the 4.25% of rate hikes has effectively lowered borrowing capacity by almost a third. So, before the RBA hiked rates, you could effectively borrow nearly a third more than what you can borrow now, which obviously reduces people's capacity to pay, and that should have an impact on house prices. And it did initially, but then obviously we had this rebound. And we've also seen there's also if you scan through the next set of charts, Sam, auction clearance rates have also fallen quite heavily. So in May they peaked at about 72% across the combined capital cities, and now they're fallen into the 60s, into the low 60s, and that's again been driven by Sydney and Melbourne. And we've also seen a fairly big pickup in for sale listings across Sydney and Melbourne over the past in the past few months. So effectively, that just shows you that demand is softening, and also people are starting to put their homes in the market. Whether that's through distress selling, who knows? But basically, this tells you that again the housing market has softened as we head into 2024, which the $1 million question is what's going to happen from here. It's just worth also pointing out that Australian households are under severe pressure. So there's a set of 3 charts there, which come from CBA, and what it shows is that this accumulated 4.25% of rate hikes has hit Australian households harder than just about every other country. And the reason, in terms of mortgage rates, and the reason for that's pretty obvious. Australian households have got in Australia we use predominantly variable rate mortgages, whereas most other countries around the world are predominantly fixed rate. And what that means is that even though Australia, the Reserve Bank of Australia, has hiked rates less than some of these other countries, like the RBNZ, which has hiked it by 5.25%, it's actually hit us harder. And that's because we've got a higher share of variable rate mortgages. So whenever our central bank hikes rates, it hits Australian households harder than it hits other places because they're mostly on fixed rates. And this cumulative 4.25% of rate hikes by the RBA has actually sent interest rate, household debt repayments, so that's both principal and interest, to its highest ever share of household disposable income. And at the same time, our tax bills have gone up immensely. So the most recent national accounts data for the September quarter, which was released a few weeks back, showed that Australians are now paying an record high share of their incomes as income taxes. So it's basically the equal highest in history. And the previous time we paid this much, I think it was back in like the 1970s. And we're paying nearly 18% of our incomes on average in personal income taxes. And that's up from about 14% over the pandemic. So households are basically getting hit by rising mortgage rates as well as high income tax payments. And then you've also got obviously the rental market where households are getting hit by rents, but that doesn't obviously impact house prices as much. So we've got this building pressure. It's been building for nearly 2 years or 18 months. The housing market defied gravity this year. And it looks like going into next year, it's finally that weight of interest rate hikes and these tax pressures and everything else is starting to send this sort of house price rebound we had into reverse. And that's showing up mostly in Sydney and Melbourne.
So Leith, with the price rebound, that's the only thing that sort of seemed like a mystery to me. All these other factors of interest rates having increased and more share of disposable income being spent on property, that seems the sort of logical cause and effect. But with house prices sort of softening a little bit, is that significant? Is there a significant sort of fall in prices as such at the moment, or is it sort of just hovering around the sort of all-time highs still?
Yeah, so nationally, prices are still rising. They're just rising at a much slower rate.
Okay.
But the two biggest markets, and it's basically, if you just look at the trends, that's the thing that's the most important. If you look at the 28-day change chart that was up there earlier from CoreLogic, it shows that basically, prices are decelerating very quickly across
Okay.
the major capitals, and Sydney and Melbourne have now started to go into reverse. And all it sort of basically tells you is that in a month or so, if you follow those trends, house prices nationally are probably likely to going to start falling, and that's driven by Sydney and Melbourne. So basically, Sydney and Melbourne are the main drivers. Obviously, they're the two biggest cities,
Yes.
and they tend to drive the overall housing market. And those two markets are now going into reverse, and that's been reflected in both prices and auction market, which is pretty sick in both markets now.
Okay, so what's happening in the auction market? It's just lower clearance rates.
Yeah. So supply is now starting to pick up. So we've auction volumes now are actually pretty high. And last weekend, not last weekend, we haven't got those results yet, but the previous weekend before that was the weakest final clearance rate we've had all year, and they've actually been trending down since May. So
Okay.
that chart, the auction clearance chart versus price growth, I've put that in the slide pack.
Yes.
And it shows that there's a very strong correlation between auction clearance rates and house price growth.
Okay.
Put them side by side there in the very, very close correlation. And effectively, auction clearance rates have tanked in the last sort of 5-6 months, and that's been met with this weaker price growth, but it's also tends to be fairly decent sort of leading indicator. So I think as we go into early 2024, we're probably going to start getting the monthly indexes are going to start reporting house price falls for Australia. Probably not big ones, like just small house price falls.
Yes.
I guess that's the purpose of the discussion today. Is it going to be a crash, or is it just going to be a minor correction? My personal view is going to be a minor correction.
Yeah.
It'll be more in Sydney and Melbourne, but in terms of nationally, pretty minor correction.
Yeah, and I guess the last interest rate rise, that's sort of the culmination of what the RBA has actually been trying to do. They've been sort of trying to cool the economy, cool the housing market, and maybe it's finally coming into effect.
Yeah, and look, this would be welcomed by the RBA. I mean, the RBA a few months ago said that this is before they did the last rate hike in October. They said that they were concerned that we had this, house prices were rising, and that was a sign that monetary policy wasn't restrictive enough. Well, now they're starting to, well, at least in Sydney and Melbourne, they're falling, but nationally, price growth is grinding to a halt, and all the other indicators like auction clearance rates are now starting to fall, which would probably give the RBA comfort. And if anything, it's just not one of these marginal indicators which suggests that the RBA is probably going to be on hold now. And my views are probably cut late next year, but we don't know what's going to happen. But I don't think the RBA is going to hike again. It seems pretty unlikely because you've got this. Obviously, the housing market's starting to roll. Not that that's a big indicator, but that's just one of them. You've got the economic growth's incredibly weak. You've got unemployment rising now. We're in a per capita recession. Household consumption is tanked. So pretty much all the indicators are that the economy is very, very soft at the moment. I can't see the RBA hiking into that. And also, obviously, inflationary pressures are coming off globally. Goods inflation's falling everywhere. You've got deflation there. You've got a little bit of sticky services inflation, but pretty much inflation's coming off just about everywhere now, including Australia, but just we're a little bit slower. And I can't see the RBA hiking again into that, and that should prevent the housing market from having a steeper correction if they don't hike again.
And what are they really trying to do? Like, I feel there's so many vested interests, and including the people that run the RBA. I don't think they really want property prices to come off a lot, but Have they done enough to sort of stagnate things, or maybe a small decline, and then that's going to have sort of on-flow effects to the rest of the economy? You think that's the case?
Yeah, I mean, as I said, I think they'll be happy with the situation. The housing market is not rising strongly anymore. If anything, it's about to start probably posting falls. I think this month's core logic data that comes out at the end of the month is going to be very weak, and same with the other indicators like PropTrack, etc. So it might post still got 10 days left, but it might post a very, very, basically a flat result this month, and the momentum is clearly out of the market, so they'll be happy with that. I think this is pretty much what they want. But I mean, the Reserve Bank doesn't focus on property prices as key indicator. It's just one of many, but all the other indicators are pointing to pretty much softness now across the economy, and that's kind of what it wants. So another reason why I think interest rates are probably peaked, and that should support, or should stop the property prices from falling more sharply. So if the Reserve Bank was to follow up with another rate hike in February and then maybe March, which I think is incredibly unlikely, but if they did, I think we'd be in for a pretty steep, potentially, property correction. A much sharper one than what we're likely to get. So I think it's just going to be pretty mild, Sydney and Melbourne driven. The other markets remain decent, probably still going up slightly, or just posting very, very modest growth. Of course, the other big swing factor in all this, and the reason why the property market rebounded in the first place, is because we've got this record immigration at the moment. So
is like the immigration, that's no secret, but I sort of feel it takes time for that to flow through, for these new immigrants to actually purchase property. There's obviously been a huge spike in rental prices, but how do you sort of directly correlate that sort of increased immigration with house price growth?
As you said, I mean, look, there is some direct demand when they, if you get wealthier ones, they can come over here and buy straight away. But so we get some of that with, say, Chinese students, etc., who've, we might get some of them purchasing, but that's pretty small at the margin. But again, like you said, it is the rental market. So it sounds sort of weird. It's like, well, how does rental prices affect house prices? Well, we've got effectively the lowest rental vacancy rate in decades, if not history, depending on which indicator you use. And what it's basically done is it's, rental prices have been soaring. So you've got rents going up about double-digit pace across Australia. You've got rental properties incredibly hard to get because the vacancy rate's at about 1% in the capital cities. And what that's basically done is it's created FOMO, so fear of missing out. So people are basically like, they don't want to rent because it's expensive. The prices are rising quickly. It's hard to get a property. They're worried they'll get kicked out after a year, etc. And what that basically does is it creates this, people then stretch themselves harder to buy a property. And it's definitely, that's definitely played a factor. It's created this fear of missing out. And, it then drives people into the housing market in terms of there's been purchases. We've also seen a pretty big rebound in investor demand this year. So there's been a lot of reports about investors leaving the market. Well, some of them have, but there's been more than replaced by, booming investor mortgage commitments. So we've got investors citing the fact, like one of the reasons is because the rental market's going up so strongly. So investors have been coming back into the market as well, and that's helping to push up prices. So the immigration thing is definitely a massive part of it. And, Stephen Koukoulas was the one who said last year when rates were rising, he said, no, we've got this mass immigration and that's going to support house prices and, stop them from falling. And at the time I was like, nah, look, interest rates will far outweigh that. Well, he ended up being right. And it's exactly what we've gotten. We've got this weird 10% rebound in property prices, despite the fact that interest rates went up another, 1.5% basically this year, which is completely counterintuitive. All that meant is that borrowing capacity actually fell. But, we've got such limited supply, both in construction and homes available for sale and rent, that when you add, 518,000 people through migration, to the housing market in a single year, which is what we did, it's basically supported prices and rents. And it's not just the 518,000 people that have come in from overseas. We've also had a maturing of the early 2000s baby bonus kids. So Sam, you wouldn't have been in Australia back then, but basically in the early 2000s, the former treasurer Peter Costello did this baby bonus. So what he did was he basically paid households to have kids. So you got money if you had an extra kid.
Yeah, I'm aware.
And what they did was it actually spiked births for several years in the early 2000s. And what that means is now those kids in the early 2000s are now hitting 20, around 20 years old. And they're now not just entering the rental market, but some of them are also becoming home buyers if they've obviously got, bank of mum and dad who can help them. So we've got both, demographic demand locally, as well as obviously record immigration, which has helped, drive up this housing demand, both for rental and for purchasing. And that's another reason why prices have risen, despite the fact we've had this aggressive rate hikes by the RBA.
Yeah, and one thing you said before that was interesting was, the investors have got back into the market, which sort of almost seems counterintuitive when interest rates are rising, because it's it's less affordable for an investor to, carry that property through the interest rate, through the mortgage expense. But the another thing is, the property boom during COVID. House prices just went nuts, and I think a lot of investors would have suddenly got a lot more equity, and then can leverage against that as well, to purchase something new. And also with rents going up, it suddenly seems more attractive. And, with this record immigration, the fundamentals are good. They're good for the long term.
They are. And the federal government, immigration will definitely come down next year. So there's no way you can have 500,000 for a second year in a row, especially because, there were some short-term factors that helped drive this. Some of it's been deliberate by the government policy, but some of it's also just been, obviously we had huge exodus of temporary migrants over the pandemic, mostly international students. And then as we open back up, a lot of them come back in, and we've had a big fall in departures. So usually, before the pandemic, you get a whole bunch of the pool of temporary migrants was going up. But every year you'd have an inflow of, say, students, I'm just using them as an example, and you'd have an outflow. And then the net would be higher overall, but you'd have, a large number of inflow and a large but slightly smaller number of outflow. Because we got the outflow of the pandemic, we're currently, this year we've just had inflow. We haven't had outflow. So that's basically biased the numbers upwards. And next year we should start getting outflow again, which will offset some of the inflow. So it sounds a bit confusing, but it's one of the reasons why the federal government projects that net overseas migration is going to fall from 518,000 last financial year, so 2022, 2023, to 375,000 in 2023, 2024, which is still a huge number. That's the second biggest number in history we've had. It's just not obviously as big as what we've just had. And so, immigration is going to remain strong, but it's not going to be quite as strong. So it'll add obviously upward pressure to housing, etc., but it's not going to be quite as strong upward pressure. That being said, housing construction is probably going to fall again. So I've created a chart on one of the slides of dwelling completions versus population change. So what that tracks is you've basically seen this massive imbalance between construction, supply through construction and demand through population growth. So we added nearly 630,000 people in the 2022-2023 financial year, but we only built, less than 170,000 homes over that time. So it was a big imbalance. And in fact, the forward-looking indicators for the housing market are really poor. So we only improved in the year to October, we only approved 164,000 homes for construction, which is even lower than what we built last financial year. And the problem with that is we actually need to build more than that number. So just because we've approved 164,000 doesn't mean we'll build 164,000. And also, you actually need to build more than that to actually increase the population by that number. And the reason for that is you lose about 6% of every house. So if you build 100,000 homes a year, only you lose about 8,000 homes to demolition, because a lot of these approvals are actually you demolish a house and you build two, or you demolish a house and you build another house to replace it, or you demolish a house and you build 4 apartments or whatever. So it's not a 1-for-1 increase in the housing stock when you do that, because you lose some. So to keep up this population growth, we actually need to build, way more than what we've approved. And there's just no likelihood that we're going to do it. And what that means is that if anything, the housing market's going to tighten even more next year. So even though immigration is going to come down to 375, according to the government, which means that we'll have probably about nearly 500 population growth once you add natural increase, we're not going to be building anywhere near that. And what that suggests is that the rental market's going to remain really tight, and we're going to have rents continue to grow far in excess of incomes, which just adds more of this sort of demand dynamic to the housing market. And despite the fact that prices will probably fall early next year, unless the RBA goes really aggressive in rate hikes, which I don't think they will. I think they're done. It'll help support house prices, and it will stop prices from falling much. That's my view.
It seems like madness to me. The running this level of immigration, if we just can't even build houses fast enough, and there's a rental crisis going on. So, I mean, on that point, like, what's driving this? Why is it just the catch up from the loss of people of immigration over COVID, or is it big business driving this, or is it just vested interests? Because I mean, most people don't want this. The common people don't seem to want this. So what's driving it? And I mean, it wasn't mentioned in the election at all. And
actually, the Albanese opposition at the time, not the government, in January last year, January 2022, suggested they were going to lower immigration. So they were going to maintain a lower immigration policy going forward. They made several public announcements on that, and then instead, once the election happened, they then did the phony Jobs and Skills Summit in September last year. Loaded it full of pro-immigration lobby groups. So I didn't have anyone I certainly wasn't invited, because I might have they didn't have people like me there who were
telling it how it is.
Yeah, basically. So what they did was then they got this fake consensus on to ramp it up to its highest ever level. They raised the permanent migrant intake to its highest ever level. They obviously, they extended all these post-study work rights for student visas and all this other stuff to basically deliberately, and they ran this on this faulty narrative of a 1 million visa backlog, which is this contrived, made-up number. And they use that to then rubber stamp as many visas as possible. And they've been, so a lot of it is deliberate. And obviously, the net overseas migration, as I said before, has been flattered by the fact that we don't have as many people departing, because they already departed over the pandemic. So that has obviously flattered the numbers, but this is a deliberate policy. And it's not just Australia, it's Canada's doing the same thing. Canada's just literally had 1.2 million net overseas migration in the year to September, which is just off the charts. Like, they've never had anything like this. And they've got the same housing problems as us. They've got rents going through the roof, massive rise in homelessness. There's now homeless encampments through all their cities now, in parks and all that sort of stuff. New Zealand's doing the same thing now. Like, they've just had record immigration. UK's just had high immigration. So it's pretty much happening all over the place. And all these governments are running the same sort of policies, which is kind of silly, especially in, Canada and Australia, where we've got these unbelievably, tight housing markets, and it's creating a lot of distress and obviously driving up rental prices. It's also helping to drive up inflation, because rents are a big component of inflation, and all this other stuff. And it's creating other problems, because in Australia now we're trying to, I live in Victoria, and Victoria is now doing this big build project where they're basically trying to build all this infrastructure, and a lot of it's very poorly designed. It's very poorly, designed projects which are subject to massive cost blowouts. And the whole excuse for it is, Melbourne's going to be 9 million people mid-century, so I need to build all this stuff. And it's only going to be 9 million people mid-century, not because Melburnians want it, but because the federal government's decided we're going to run this mass immigration policy. So, yeah, look, the whole thing's sort of tail wagging the dog economics, and it's designed for interests of big business, universities, etc., to sell, to more courses to foreign students, etc. And it's just creating all these problems. And I'm not anti-immigration, but I just think we should basically run at a much more lower sustainable level, like we did pretty much pre-2005 before they decided to ramp it up. It's just pretty logical stuff. Like don't run an immigration program that's beyond the nation's ability to supply homes and build infrastructure, and also, corresponds with your water supplies and your natural environment. Pretty simple stuff. But our governments don't do that. They just run it as hard as they can, and then they worry about they don't actually worry about the consequences, but they just let the consequences rip. And that's effectively what we're doing. It's stupid, but here we are, and it's the reason why the property market's going to be supported.
Yeah, and to me, it seems what you've just said is common sense, and I've heard you talk before about it's this sort of desire for growth and this desire for productivity, but productivity is not coming through the economy. So we're just more people equals higher GDP and this sort of fake productivity, the economy growing. So I think that's a major factor as well.
Yeah, it is. And look, it all gets down to, I'll tell you one of the main problems Australia's got. We've got this, more so than most countries, we've got a vertical fiscal imbalance. So what that basically means is the federal government collects, because of the way our tax and expenditure system set up, the federal government collects 80% of the tax revenue in the country. And the states and local governments collect about 20. And the problem with that is, and then there's the similar disconnect between spending and tax revenue. So federal government collects most of the tax. The states are actually responsible for most of the service delivery, infrastructure, etc. So they incur most of the spending. So what that means is the federal treasury love huge immigration, because it basically means they get more tax receipts. So they get more company tax, more personal income taxes, etc. And that props up the federal budget. Problem is the costs of doing that fall mostly on the state budget, who've got to provide the infrastructure, the schools, the secondary schools, the primary schools, the hospitals, all that sort of stuff. That most of that cost falls on the state government. So you got this, busted incentive system where the feds collect most of the gains from running high population growth policy, whereas the costs are borne on everywhere else. And the way the states are trying to get around it is they try to sell everything. So privatize everything. And all that's ended up doing is just pushed up costs for, so basically gone to cash converters, flog their assets, got a bit of money in the door to then build infrastructure or do all these public-private partnerships to then build infrastructure for all these people coming in, which is the decision of the federal government. And all it's meant is that, they've sold off everything, and then the cost to users, so people that live in these cities like you and me, ends up going up. And it's probably worst in places like Sydney, where 20 years ago you could basically drive across Sydney and there was only about 2 toll roads. Now you can't drive anywhere. There's about 20 toll roads in Sydney, and basically anywhere you go now you got to pay Transurban a huge amount of money to go anywhere, and you can't travel. And even despite paying all that money, it takes you longer than it did 20 years ago because there's so many more people. So it's kind of, it's a stupid policy, but it's the way it is. And big business loves it. The Australian Treasury loves it. The university love it. If you're Harvey Norman, you're Harry Triggerboff, who's a massive apartment developer, you love big migration because it just means you grow your customer base every year, and it's an easy way to make money. So it's one of the reasons why governments do it is because their donors love it. But the ordinary Australian doesn't love it.
Yeah, I mean, the vested interests, they're the ones benefiting, and at the expense of many others. And it seems like it's such short-sighted thinking from the state governments by selling off all the assets. And you would think, as the people, federal government and state government should be talking to each other and working together for common interests, for the common interests of the people. But it seems like through this system, they're at odds, and the people are sort of the ones that are worse off out of the whole equation, which is unfortunate. Not really, in my eyes, how government should run and operate.
No, and it's funny you say that, because I've been following this topic for a decade, and pretty much every opinion poll in the last decade has basically said that roughly 2/3 of Australians don't want the population to be growing so quickly and don't want immigration levels to be so high, because they've been high pretty much since around 2005, when they were magically more than doubled, without any real consultation. Just the federal government decided this is great for the budget, let's just ramp it up. And you can see it in those charts, the population explosion we had after 2005, when the federal government decided to ramp immigration through the roof. And pretty much every opinion poll since then has been negative. We've had two this month that are really negative on it. Just add them to the pile, because we've had dozens of them. And yet the federal government doesn't care. Nobody cares. They just ignore us, because that's what their donors want. So it's the way it is, Sam. But I mean, I guess, in terms of the housing market, it's kind of a long-term bullish signal for the housing market. It means that we're going to forever have more and more demand. The population is projected to grow by 14 million people over the next 40 years in Australia. And that's basically Sydney, Melbourne, Brisbane, Adelaide in 40 years. Sydney and Melbourne will be about 9 million apiece, if not 10 million. And, it's going to be, that just means we're going to have more and more people fighting to get housing. And it's one of the reasons why, houses will continue to get smaller. Well, it won't be houses, they'll be apartments. Will continue to shrink in size, they become more expensive. And, why landholders can potentially make out like bandits, because it's going to become more scarce and you have more people fighting over it. So, it's another reason for next year, at least, not to expect a big house price bust. Because, as I said before, I don't think the Reserve Bank is going to hike rates again. Could be wrong, of course, things can change. But B, because we're going to have this structural massive housing shortage, because the population growth is going to remain really high, like not as high as the year we just had, but still, the second biggest year in Australia's history rather than the biggest. And at the same time as, housing construction is just absolutely in the gutter. I mean, we've got high interest rates. We've got materials prices have risen about 40% over the pandemic, which has made it more expensive to build homes. We've had thousands of home builders have gone under. So there's, that would suggest there's less builders available to build homes. And all those factors mean that we're not going to build as many homes at the same time as got more people needing homes. So all it means is just, dire straits for the rental market. It's going to remain absolutely stuffed. More people living in group housing and more people becoming homeless. And obviously, it should put a floor into house prices. So for those reasons, I think, I think we're going to have the first few months of 2024 are going to probably post some house price falls, but I don't think it's going to be much. And then if the Reserve Bank does end up cutting rates, which, the CBA and other economists seem to think is probably pretty likely in the second half of next year, well, who knows? We could be off to the races again. It's too early to call that, but, the sort of writings on the wall, I think, just this structural housing shortages and,
There's just so many factors, like you say, with all the, those headwinds in the construction industry for housing. And even if there were enough, home builders and, all these builders hadn't gone bust, it just takes years. It takes years and years and years to build hundreds of thousands of homes. And, that's what we're talking about. We're talking about huge numbers of people coming into the country that need housing, and you can't just solve that problem in the click of a fingers, or 1 year or even 2 or 3 years. It's going to take a long time, and with the backdrop of everything you've mentioned, the fundamentals for house price growth is still strong, and like you say, there might be a small dip, but unlikely to be anything meaningful.
Yeah, unfortunately. I mean, look, it's it's not great. I say this quite often. I've got two kids now, teenagers, and I sort of look at them and go, geez, it's a pretty bad equation for them. And just on the housing construction thing, you said it takes years. It's interesting because around my area, I go for walks, runs. I run a lot, so I go for runs around my area, and there are literally houses that have been under construction for well over a year. And one of them, it's probably been 18 months now, and its initial builder went bankrupt, and then it's just started construction again. So obviously got a new builder, but this is pretty common. We've had this. So, a lot of people say, oh, we're just catching up for lost immigration over the pandemic. It's not too bad, because basically population's caught up to what its pre-COVID trend was now. So we, lost migrants at the start of the pandemic, and then now we've got them all back. But the problem with it is the supply side of the economy has also got smashed. So we didn't build a whole bunch of homes over the pandemic, or, we're still trying to finish the ones we started years ago. And so this whole idea of catch up, we haven't caught up on housing supply, and we won't. So the whole idea that we need to catch up on population is ridiculous, because it's just creating a structural housing shortage. And it's one of the reasons why rents fell at the start of the pandemic, and now they're rocketing, because migration went negative at the start. And then now obviously it's gone to levels we've never seen before. And that's obviously pushed rents up. And as long as that sort of equation stays, the rental market's going to remain, rents are going to grow at a rate that's higher than incomes. And the rental market's going to remain, the vacancy rate's going to remain really tight. And the only thing stopping the vacancy rate coming down even more is the fact that we've now got people moving into group housing. So, at the start of the pandemic, when there was all the work from home stuff, the number of people per house actually fell because you had people not wanting to live in group houses as much. You didn't have as much demand for migration, so there was more homes available. So a lot of people just moved into out of group housing. But now that's totally reversed, and now they're shifting back into group housing in a big way because it's become so expensive and there's so little homes available. Now they've had to share accommodation, and that process is going to continue as the housing market remains tight. Just going to get more and more people forced to live in group housing, and for those who are unlucky enough, more people forced on the street. So it's just the way it is, unfortunately. That's what happens.
Yeah, we're just going to jump to a quick sales message. We'll be back in a minute. We'll be back with the investment insights very shortly. Nucleus Wealth is an active and passive investment manager. If you like what you're hearing and want some help with your investing, we can do it for you via our active portfolios. Our tactical and core portfolios use the insights shared in this podcast to construct and manage your investment. We blend tactical portfolios to offer our combinations of international shares, Australian shares, government bonds, and cash. We vary the asset allocation with the goal of protecting your capital in times of market uncertainty. We also have active international and Australian share portfolios. These are chosen using our quality and value investment philosophy. You can find out more at nucleuswealth.com. Now back to the show. Just one more quick thing. We just want to ask you for a simple favor. We want to spread the message about transparency, innovation, and integrity in investing. At Nucleus Wealth, we live and breathe these values. We would love it if you can help us spread that message, and subscribing to our channel will help us do that. We would be most grateful if you can hit the like and subscribe button now. Okay, so Leith, we've had a few questions coming through, and plenty of fans of your commentary, and not only here but on macro business as well. So we've got a couple of questions here. One, like a comment from Gil, saying we need to build higher, like Singapore and Israel, big apartments with parks and not low blocks of apartments with no parks. Like, what are your thoughts on that around sort of apartment living?
Look, I totally disagree with you, Gil. I'm sorry, mate. That is a recipe for much lower living standards. I'm not against apartment living per se, but to put everyone into high-rise slums, no thanks. It's not the Australia I grew up in, mate, to be quite frank. Australia was always a place growing up where you basically could enjoy a good quality of housing life. You didn't have to live in high-rise shoeboxes. And I'd rather us not become like that, to be quite frank. And if we are going to do it, it should be low-rise apartments. I'm sorry, not this high-rise trash. And if you actually look at the quality of the high-rise that has been built, so we did have a high-rise boom between 2015 and 2020, 2019. It was an absolute disaster. The build quality was disgraceful. We had obviously not just the flammable cladding issue. We've had balcony defects. We've had structural defects. We've had entire apartment blocks, Mascot, Opal Towers, a whole bunch of other ones that had to be evacuated because the building construction was so poor. And I'll tell you this, mate, I met with 3 builders 2 weeks ago at a Christmas party at my boxing gym. They're all 3 separate builders. And they don't really know what I do for a living, but I was asking about, the housing target and the quality of construction and what they thought about high rise. And all 3 of them said, I would not touch a high rise apartment built in the last 10 years with a 12-foot barge pole because the quality is that poor. So do we really want that? I mean, do we really want to be building? So the whole thing is, if we keep maintaining this mass immigration policy, we're going to, obviously, it's going to go to the path of least resistance, which will be these high-rise apartments, because it's the easiest way to build stuff quickly, build a whole lot of crap, cheap stuff quickly. And that's exactly what we did the second half of last decade, and look at the results. So why do you want to repeat that over and over again? The better solution is not to create the problem in the first place. Don't fire hose so many people into the country, and then we can build more slowly and with higher quality. Because doing the same thing over and over again, to me, is the definition of insanity. And why do we want to give up Australia's great quality of life, which we've enjoyed, which generations have enjoyed, mostly detached house living, which I'm a big fan of, to be quite frank. But townhouses and all that sort of stuff's fine as well. That's good. Just to live in a high-rise shoebox, if you want that, go to Asia. That's my view.
Okay, thank you for that, Leith. Hope that answers your question, Gil. We've got another question from James here. He's saying, thanks, Leith. And he's asking, well, he says, it hardly seems possible, but do you think longer-term Aussie house prices will continue up? And asking double again over the next 10 years. I mean, I don't know if you got your crystal ball, but my sort of take on it is it seems like there should be some sort of limit to house prices because of 100%. Affordability. And, a third of people do have mortgages, a third of people have no mortgage, and I believe about a third rent. So, what are your thoughts? Can it just keep going to the moon?
No, I mean, look. I think prices can still rise in real terms. So, I mean, they can still rise above even incomes. Just means that we're going to be more people are going to be missing out, and we become more of a haves and have-not society, which we already have anyway. Well, let's face it, equality, egalitarianism. This sort of gets back to my former point to Gil, was a central tenet of Australia and also New Zealand. They were egalitarian nations where, pretty much anyone can own a home, etc. And that's gone out the window, let's face it. And I think that process is going to get worse. We're going to have a bigger gap between the haves and the have-nots, and prices will rise faster than incomes. But that being said, double over 10 years, I just don't think it's possible. It's not, especially it could have maybe happened if interest rates turned negative. So, when they went down to 0.25% the cash rate, there was the potential that we follow some other countries and you can actually go into negative, where effectively the central bank pays banks to give people mortgages. That would be the only way I think it could, it
seems like a crazy world, right?
Well, hey, look, mate, it was, it's a crazy world. It is. And, but, some countries have done that. So, I think the only way you get a doubling in 10 years if you had that sort of monetary situation, which is just, given where we're at now, seems incredibly unlikely. And I don't think, the median house price in Sydney, for example, is getting up to 1.5 million or something for a house. I'm talking not apartment. The notion that could go to 10 million even in a decade, or the Australian median to go from, I'm taking a guess here, probably about 800 to 1.6 million in 10 years, I think is very unlikely. But that said, I don't think income growth is going to be very strong over the next decade. Right now, because of inflation, it's okay. But, I can still see property prices rising and beating incomes income growth, but don't think it's going to anywhere near doubling in 10 years. That's my personal view. But hey, you never know. I mean, if I was to look back 10 years ago, I would have thought we'd be where we're at now. So you just don't know. There's, depends on policy, depends on, we in 10 years, I could look back and go, geez, we did end up doing that with negative interest rates and that sort of stuff. You just don't know. But, it doesn't seem very likely, put it that way. Seems incredibly unlikely.
Agreed. Excellent. So we've got another question from James John. He's saying he's a big fan of your commentary on immigration and impact on housing. And he's wondering what you think about how lower birth rates in Western countries impact this equation.
Yeah, well, I mean, look, we do have lower birth rates, obviously. And again, it's kind of a bit of a chicken and egg situation we've got. Part of the reason I'd argue that we've got lower birth rates is because the cost of housing is so expensive. It's become expensive to have kids. Also, the whole thing about everyone goes to university now. Well, not everyone. I'm obviously exaggerating, but there has been a massive push into young people going to university. So we're at about 44%, I think, of school leavers now go to uni. The federal government, in their infinite idiotic wisdom, wants to get that up to 55%. God knows why. And so people delay entering the workforce, and everything's delayed. So you have kids delayed. The cost of having kids is hard. It's more expensive now. Obviously, the cost of shelter is more expensive, whether you rent or buy, and all this stuff impacts the birth rate. And it's one of the reasons why I think it's happening all around the world as well. So in Australia, there's this whole notion of you can't have a stable population because that's not good. So you need to import a whole bunch of people to keep it growing like a science experiment. So that's kind of where we're at. And Canada's doing the same thing. New Zealand's doing the same thing. And it seems to be an Anglo disease, to be quite frank. This sort of stuff doesn't happen in the Scandinavian countries, which actually sort of run economies for their people, unlike us, which run it for corporations.
Excellent. Okay, well said. And we've just got a comment from Alex saying, all the people who claim property prices will double each 10 years don't understand compound growth.
No.
So,
yeah, look, it's all right to look at that when we had sort of house prices of 3 times incomes, and then obviously the Reserve Bank, and we had 30 years of basically structurally lower interest rates. That can happen. But we've got the opposite now. We've got obviously house prices at 7 or so times incomes nationally, and we're basically we've had rates rising, not falling. So that 30-year structurally lower interest rates is reversed, and so under that situation, it seems very, very unrealistic to think that we could get a doubling in 10 years. But again, you never know. It just because it's incredibly unlikely doesn't mean that it couldn't happen. If the right, if they're bringing 100-year mortgages, heaven forbid, you just don't know. I mean, it could be something absolutely ridiculous. 100-year mortgages, they start doing this, shared equity stuff everywhere. That becomes a norm where, the lender and the government takes a big chunk of your equity, so that lowers your monthly cost. Negative interest rates, all this sort of stuff is possible, unlikely, but possible. And that's the only way I think you'd sort of get that kind of doubling in 10 years.
Nice one. Thanks for that. We'll be back again shortly. If you like what you're hearing but want a low-cost passive option, Nucleus Wealth is the first to offer passive direct indexing in Australia. The first generation of passive investing was index funds. The next gen was ETFs. Now direct indexing is here with significantly more customization and control. The benefit of direct indexing is you can add or subtract investment themes, and we have almost 100 different options to choose from. For example, you could buy an international share direct index portfolio that excludes fossil fuels and arms manufacturers and has a tilt towards cybersecurity and cloud computing. Alternatively, you could buy a portfolio with no screens and an extra exposure to nuclear power and defense contractors. You can find out more at nucleuswealth.com. Now back to the show. Okay, and now we have our question of the week. So this is for viewers to have some discussion in the comment section over the coming days. The question for this week is, where do you think property prices will be at the end of 2024? So feel free to have some discussion, engage with us and some of the other viewers. I can see Mick Diddy has put a comment through already saying house prices will drop as a severe recession is about to begin, especially. So there we go. We've got our first comment already. So yeah, Leith, I mean, back to you for a bit of a wrap up and some final thoughts.
Yeah, final thoughts. We'll probably get some weakness this early 2024, maybe all of 2024. We get some, some price falls. And there's another factor I didn't mention just quickly. Obviously, I think we're going to have a decent rise in unemployment next year. So, I wouldn't be surprised at all if the unemployment rate's, getting towards 5% by the end of the year. Partly that's because we've obviously got a weak demand for workers because the economy is weakening, a weakening demand for workers. But also we've got this, obviously the labour supply is growing very quickly through immigration. So you add those two things together, lower demand, increased supply means rising employment. So that could have a, material impact. But, basically, I think, we're going to get a mild property correction, nothing too much, just because of all those factors I said before. And then, if the RBA starts cutting rates again, which I think if you did get that, sharply rising unemployment, etc., the RBA would cut rates. And then we could be back to the races late 2024, but, it's too early to say. But I think mild property correction and then RBA cuts rates and then probably another bounce of the madness. But, we'll reassess next year.
Excellent. Nice one, Leith. Thank you very much. There's lots more comments flowing through. So it's obviously a hot topic. And thanks for coming on the show. And we look forward to hearing your commentary in the future as things unfold. And you never know. 10 years, we'll see what happens.
Mate, I just hope I'm still here. Thanks, Sam.
Thanks, Leith. We'll see you next time. So we do welcome your feedback on the podcast, especially in regards to suggestions for future topics. If you do have any ideas, please drop it in the comments section below or send us an email at contact@nucleuswealth.com. Also, if you know of anyone that might get some value out of today's episode, we'd really appreciate it if you do share it with them as well. So for myself, Leith, and the rest of the team at Nucleus Wealth, thanks for watching, and we look forward to seeing you next time. Bye for now.